Hi guys, welcome to the Quant Street's latest episode. Today I'll be covering the market summary for the date of April 22nd, and I'll start with the big breaking news today that happened at around 1:28 p.m. when the US stocks, it seems, turned lower after Bloomberg News reported that Biden is eyeing a capital gains tax as high as 43.4% for the wealthy. And you can see S&P 500 crashing down from highs of 4180 to a low of around 4140. So let's see what else happened in the day. So this is the daily chart of various asset classes, providing a macro level view. So we have S&P, we have TLT, we have gold, we have the 10-year yield, we have Russell. Amongst the lower volatility asset classes and amongst the higher ones, we have Bitcoin, Wix, Tesla and Ethereum. To start with, we can take a look at how oil started quite low in the morning and then gained back and then remained almost at a flat level of negative 0.24%. Gold also remained almost flat, just losing about 0.01%. The gainer among these five asset classes were the bonds, TLT rising about 0.29%, while SPY went down 0.92%, Russell, which went up quite sharply relatively, and then ended at minus 0.69% after that news hit at around 1:30 p.m. and all the gains were reversed by that time. So you can see how sharply the US 10-year Treasury yield rose, going up to I think about almost 1.6, and then finally settling at 1.54 and a loss of minus 0.56%. Amongst the more volatile asset classes or assets, Wix actually rose at around the same time, gaining about 8.3%. Ethereum gained about 3%, whereas Bitcoin fell sharply to minus 5% and Tesla to minus 3%. And it's really perplexing that Ethereum has broken away from Bitcoin. It used to track quite closely how the Bitcoin moved, but more recently Ethereum is going in its own independent path, and we'll see that very soon in the upcoming views and charts. Let's take a quick look at again how these different asset classes have been performing over different time periods. So today was a severe day for crypto. Ripple going down by minus 19%, Litecoin by minus 10%, and the chart I showed you earlier was up to a time of, it's not the latest, it's till about 4 p.m. but now Ethereum has reversed all its gains and it's now minus 4%, and Bitcoin is minus 7%. If we take a look at the 1-year time horizon, the Ethereum asset has been the biggest gainer of all the assets that we see on this sheet. Looking at the major indices, the Dow Jones, the S&P 500 falling by 0.9%. So did Nasdaq and Wilshire. Russell, not that sharp decline in case of Russell. VIX was up, and European indexes were up too. For year to date, everything seems to have gained except VIX. So over a medium term, I can say the stocks have been performing well. Going to the sector distribution, so everything was negative today except telecoms, and the least decliner, I would say, was retailers in this group, and it has gained the most at about 43% till year to date. Airlines 28% is also has been a strong gainer, but more recently, as you can see, a 5% decline. Energy also having a bad month in a second quarter, declining by -6%. Healthcare more recently, because of the significance of the vaccines and how they have improved the economy for some of the nations which have led the vaccination efforts, have caused the healthcare stocks to go up as well. So the discrepancy is quite evident when it comes to the countries that have vaccinated their citizens and how they have controlled the hospitalizations and deaths in the recent past, while there are others who haven't been able to do so, and because of that they're struggling, and they need more such vaccines and more demand, more healthcare infrastructure, and seems like they will be dependent on international efforts to bring them out of this the mess called COVID. Coming to commodities, oil, corn, soybean, and cannabis stocks gained today, and looks like precious metals down, natural gas down, and other metals also went down. In year to date, tin has had a good run, and I think cannabis and oil also having had a good run, anticipating the rise in demand for oil as the economies, at least the Western developed world economies, are able to open and anticipate a brighter future in the near coming months. Coming to fixed income, as you saw earlier, TLT gained, and so did the others, while short-term bonds were flat. 10-year note was down by -0.64%, and high yield was also down, as it mostly goes along with stocks. You can see a strong gain 69% for TNX, whereas TLT has seen a 10% decline. The tech heavyweights were all down. Tesla down the most by 3%. Google has performed exceedingly well compared to its peers in this year so far, whereas Tesla has been doing well more recently. But if we see the overall year-on-year gain, Tesla is far ahead. Coming to international stocks, so most of the European and Chinese, Japanese, Russian stocks were up, and Germany, France, Hong Kong, and emerging markets overall were down. Year to date, best performing is Taiwan and Euronext. Whereas China has been flat. China consumer has had a negative return for this year, and Germany, France, Russia have done pretty decently. And finally, looking at the industries, so biotech, semiconductors, gain of 11% this year, airlines 17%, banks 23%, broker dealers, again financial services industry up 20%, tech, disk drives, hardware, and home builders again significantly up at 29%. The day was pretty bad for all these industries. Nothing much to show except for agriculture, and it looks like a mixed bag over here in terms of industries, at least in this quarter and this month. So let's take a look at the trends over the last 1 month. And as I was telling you, Ethereum has broken apart from being tied to Bitcoin historically, and look at the gains. It's 44% in the last 30 days. The indexes tracking themselves pretty well, except Russell gaining only about 4.6%, whereas SPY and NASDAQ about 6.6%. The laggard in the sectors has been energy. And if you look at the oil prices, they have been gaining. But if you look at XLE, it's been negative, at least this month. Overall, this year it has done well overall. And if we zoom in to this chart a little bit, then financials, utilities seems to be, or actually technologies are up the most, utilities somewhere in between. Consumer, healthcare, industrials, so most of them range bound in about 8, so about 4 to 8%. Let's take a look at the commodity. The inflation story has served them well. So oil overall up for last month. Palladium up 10%, and coppers, all the metal stocks are up. And I'm looking for gold. I think here it is, almost 3% of gain for gold over last 30 days. Story for TLT is positive among the bonds. Amongst the tech stocks, except Netflix, which had a sharp decline after its results, down from 5.5 to 2.2% of negative, so down almost 7%. As I mentioned, Google has done exceedingly well over this year and over the last 30 days. Some of the specialty stocks or ETFs here, so cannabis, SPAC, both are negative because of a lot of regulatory focus on these two domains. GDX, the gold miners, silver miners have done well. Semiconductors and AIEQ, a specialty, I think robo advising ETF. Amongst the international markets, India is performing the worst, whereas all the others are positive in the last 30 days. So with that, I think I'll conclude my market roundup for today. This has been Quant Street News and Analysis Briefing, and please keep checking back on this channel for more such videos. Thanks again for listening. If you enjoyed thoughts on the macroeconomy and markets, please take a moment to rate and review us on the podcast app or YouTube, and please subscribe, give us a like, and help more people find the show. So thanks again, and Quant Street is signing off. The preceding content is informational only and based on information available when created. If it is not an offer or solicitation, nor is it a tax or legal advice, it does not consider your financial circumstances and objectives and may not be suitable to you.